Hi, this is Eurchf, and today it's Tuesday, 18th of June 2013, and the time is 20:40 GMT. I'm looking at the weekly chart of the pair, and I want you to pay attention to this long consolidation. This is the absolute stasis. We see that the Kumo, using Ichimoku Kinko Hio system, I'm using Ichimoku Kinko Hio here, I'm using Bollinger Bands, Alligator, the three colored lines, and the fractals, these purple arrows. We see that the Kumo, the cloud of Ichimoku system, is horizontal for weeks, for months. And price has been moving on this level, on this zone, sideways for months. This stability begets volatility, and we should expect a big boom here, not just a breakout, a huge move, a huge move. So let's see the bigger picture on monthly chart. Let's see which are the biases here. If we use only Ichimoku Kinko Hio, we can say that the biases are bullish or bearish because Kumo is horizontal, the leading Kumo has flat top, flat bottom. The odds are 50-50. The biases are a bit more bullish than bearish, slightly more bullish than bearish, but this is it. Using Bollinger Bands, Alligator, and fractals, I get some more hints about where the market wants to go next. So if we look at the monthly chart, we see that we had this huge reversal after this very big fall, and price is been contained from this branch of this axis for many months. It fluctuates up and down at the same zone for months. We see that leading Alligator is slightly curved upwards, and we had this fractal below median line, Bollinger Bands median line, below Alligator's teeth, the red line, not to mention this one, and we had this while leading Alligator is turned upwards. This is a strong bullish signal. Now, in terms of Ichimoku, we see that Chiku span, the green line, is touching the price, is moving sideways the same way price moves, and it's touching the price. It is here, and it is turned downwards. It's still below the Kumo, which means that it is moving in a bearish environment, but it rather wants to go up than down. Okay. Now, on the weekly chart, we see that Chiku span, here it is moving above past price action, but it's turned downwards, so we want it to go straight up. On daily chart, on the daily chart, you see this pair has very straight idiosyncrasy. It makes these big candlesticks that cancel each other. You see, a big bullish candlestick, double top, and then a big bearish which cancels all this move. And you will see many pairs like this. Anyway, on the daily chart, we see that price tries to make a successful bearish Kumo breakout. It made it here, but then price was attracted to the Kumo. Kumo acts as the magnet to the price, and now leading alligator shows that price should go down. The leading Kumo, though, although bearish, it's rather showing that we should expect a reversal, a bullish reversal. Things are a bit crazy here. So the picture at one glance is bearish, but the biases are bullish on the daily chart. H4. On H4 chart we see that the leading Kumo is bearish, but the edge is flat top, belly down, which is a clearly bullish formation, and the distance between second span A and second span B is so small that it's just a matter of a few candlesticks to have a cross here, a bullish cross of second span A and second span B, which will give birth to a new Kumo, and it probably will go up and its edge will be sharp, pointing upwards. That's all. These are all assumptions, okay? But that's a scenario. We see that the leading alligator here is horizontal. You can't say it's curved downwards or upwards, but if we have a bullish Kumo breakout on this chart, on the H4 chart, or if it starts from smaller time frames, let's go to smaller time frames. This is the H1 chart, this is the M30, this is the M5, and this is the 1 minute. Okay, so my suggestion: you monitor the trade from the M1 chart, which is the smaller time frame and which gives you without doubts the instant price movement right here, right now, where it wants to go. Once you have a bullish Kumo breakout here on M1 chart and it is 100% valid, then you go to the M5 chart and you want to see the price up here, and the Chiku span, which is down here now, you want to see it up here straight going upwards, and you want to see a bullish Kumo breakout here. If you see a bullish Kumo breakout here above this horizontal long horizontal Kumo, expect something big to happen. Okay, you see that we had this bearish breakout after that horizontal Kumo, and you see the magnitude of the moves that followed. Okay, so once you see bullish breakout on M1 chart, bullish breakout, Kumo breakout on M5 chart, if the price manages to break above the Kumo and you have a strong bullish Kumo breakout on the M15 chart, and if the price also manages to make a strong bullish Kumo breakout on M30 chart here, and on the condition that price manages to go up here, so we have a clear bullish picture on the H1 chart. If all this happens, eventually a price will be somewhere here, and a bullish Kumo breakout on the H4 chart will be a fact. So if you have all these smaller time frames aligned and all of them 100% bullish, yes, you can enter long, you can place your buy order, and you can select, you can go back to M1 or to M5 and select a place where you will enter. You enter long and you monitor your trade. You put your stop a few pips below the biggest, the lowest point, the recent lowest point, the swing low. The lower the better. It depends on your account's tolerance, and you monitor the trade from the H1 or the H4 time frame. Now, if you enter, this is my suggestion. Of course, this is a totally subjective matter, so you make the decision. My suggestion is that if you enter once you see a bullish Kumo breakout on H4 chart, you should exit, and you should plan your exit, your take profit target on a bearish Kumo breakout. If the price breaks through here and it's strong, and the trend is strong enough, normally we will see, let me make it smaller, okay, normally we will see, okay, a bullish Kumo being created here, like this one, okay? So imagine that price is somewhere here now, okay? Imagine this in the past. So you expect to see a bullish Kumo like this. You enter here just after the breakout, and you should exit here where the bearish Kumo breakout happens. Your profit is from here up to here. It's not very clear. Up to here, okay? Or the Kumo is here, somewhere here, and we had the bearish Kumo breakout here. Okay, I have let me magnify it a bit. All right, so you enter here on the bullish Kumo breakout, and you exit here on the bearish Kumo breakout. So your profits are from this point up to this point. This is your profit zone. So if you enter here, somewhere here or here on the bullish Kumo breakout, you should exit somewhere in the future where there will be a reversal and price will cross the Kumo from the other side. Okay, so this is it for now. Let me remove fractals, alligator, and Bollinger Bands and recap. So once you see 100% bullish Kumo breakout on M1 chart, 100% bullish Kumo breakout on M5 chart, 100% bullish Kumo breakout on M15 chart, the same 100%, the price goes up here, 100% bullish Kumo breakout on M30 chart, 100% bullish Kumo breakout on H1 chart, and where price crosses the Kumo on H4 chart, it gives a bullish breakout, then you can go back to M1 or to M5 and find your long entry point. Place your stop as lower as possible below some major support points, and trail your stop, putting it a few pips below its new higher low. And this is it. If you want to follow my advice for the take profit target from Kumo breakout to Kumo breakout, that would be nice for you. Thanks for watching and happy pips.